Good morning, traders. Welcome to the Pirate Traders live stream. My name is Charles. Today we're going to be looking at the ES and the NQ and discussing how they might move through the two-way auction process. I thought today was a great day to go live on the public channel because I think the scenario that we're presented with this morning is a really great learning opportunity. So essentially, just a few minutes ago, the market had a gap up. We were up above yesterday's high. We consider anything outside of the previous day's range to be a gap. So if it's above the previous day's high, it's a gap up until they get to the previous day's high, at which time the gap is filled. If it's below the previous day's low, it's a gap down until you get to the previous day's low. Okay? And that is its own thing. Gaps operate differently than markets where we open inside the previous day's range. So if we'd opened with a gap up this morning, we would have had really clear signals from the market of what to expect happening next. If the market had opened with a gap up and immediately pushed higher and found support at the overnight high, we would have thought they're heading back up to the all-time high. If the market had pushed up there and failed and come back down, we would have thought they're going to go fill the gap. Both of those are tradable opportunities. If they'd have come down and filled the gap and found support and then turned around and head back up, we'd be long for the move to the upside. If they came down and filled the gap and couldn't find support and started to spend time and bring in volume inside yesterday's range, we'd be looking for a pullback in price. And we've got 2 week references right here that need repair. Those are both targets for a downside move. And in that case where we didn't get to the overnight high, the target would be the overnight low. So all of those are very exact things where it's like, exactly what to do depending on what happens right out the gate. The minute the opening bell rings, you can start entering trades. Everything makes sense. Everything has probabilities tied to it, which increase the odds of its success. And it's wunderbar, right? It's great. It's wonderful. But we didn't get that, right? What happened was just a few minutes before the market opened, we popped back down inside yesterday's range. When we get back inside yesterday's range, all those probabilities disappear. The odds of one thing happening versus another become completely random and very difficult to understand. So this puts us in what we call a chop zone, an area where we don't really know exactly what's going to happen first thing this morning. Like a gap, we could know right away. Now that we're in this chop zone, we have to just wait for the market to give us more information. So if we'd opened up here and come back into the range, this would be a great target to the downside. Now, who knows? Maybe we poke through it in reverse. Maybe we don't test it at all. Maybe we reverse right now at this moment and head up. That's what makes a chop zone difficult. And unfortunately, that's what we have here this morning. So the way that I see this is the market is in a chop zone between yesterday's high and the overnight low. My reason for thinking this is those are two levels where something can change in the market. If we get above yesterday's high, we can start to squeeze sellers. For example, the people that just went short a few minutes ago that got us back down here into the range, right? We can squeeze sellers and that creates a little bit of momentum up. If we start to create momentum up, we can bring in buyers, right? People that were maybe too afraid to buy the low down here. Suddenly, when they see we're above yesterday's high, they start to buy. That creates momentum up. But until we get above yesterday's high, we don't know. Are we going to squeeze sellers? Are we going to bring in buyers? We have to wait and see. Same thing at the overnight low. Okay, that's an area to squeeze the buyers who bought the overnight that brought us up here, as well as bring in new sellers. So in between these two levels, there's nothing to do as a trader, but wait and watch and see what the market is telling us. When we get to these levels, that's where we can start to look for trades. So this one doesn't count because we just barely tagged it. We were only there for 1 second. But if we get above yesterday's high and it looks like we're going to spend time and bring in volume, that is bullish to head up and test the overnight high. So that is bullish from 63.09 up to 63.17. Okay. If the market cannot bring in buyers up there, it's bearish to come back down and test 6,300. So that is from 63.09 to 6,300. Let's see which we get. Do we get that new buying? Do we get that support? Or do we fail? Meaning we need to come back down looking for discount shoppers. this price was too expensive. Maybe this one's affordable. We will find out literally right now. If you are new to the channel, please subscribe. I do these live streams from time to time, but if you don't hit the notification bell, you won't know when I'm going live with these live streams. If at the end you find you really enjoyed this live stream, you might consider joining the Pirate Traders Brigade. There's a link in the description below. It costs $20 a month, and I do these live streams every single morning. Speaking of the brigade, they're already hanging out in the chat. Good morning to Abstract Grooves. Mark in the house. Sniper Trades is here. St. George, good morning to you. Will in the house. Willie T in the house. Will and Willie T, are you the same person? You always seem to say good morning at exactly the same time. Crypto Rider, good morning to you. Arjun is here. Kevin, welcome, welcome. Global Trading in the house. Croco is here. Arjun says, please like for now. Yes, please do smash that like button. The more likes we can get right now within the first few minutes of the live stream, the more YouTube will push it out to new people. So we got 65 people hanging out. If we can get like 50 likes, before you know it, we'll have 120 people in here. So do please smash that thumbs up button. Grizzly Bull in the house. Jads is here. Oh boy. Good morning. Willie T says, nope, we're not the same person. I'm going to have to take your word for it, Willie T. Now, if Will says the exact same thing after you, then I know it's not true. Okay, so the market was not able to really test the previous day's high. We did technically poke above there, but we were only up there for about 1 second. So that's just computers trying to take out stops. That's not real traders doing business up there. We also only did 6 contracts. So now what I'm doing is I'm watching the ticks. This is the tick chart, T-I-C-K. And I'm watching to see from where they are right now, which is at 60. Do they go up? Or do they go down to a negative number? If they go up, that means we're going to come back up and test that high. If they go down, it means we need a dip back down towards 6,300. So, which is it going to be? The ticks will tell the tale. It just keeps on chopping. Yeah, it keeps on chopping. Will says, I think we're not the same person. Ah, you found a loophole. And Willie T says that the brigade subscription is awesome, but he's only paying for one, which is fair. I'll take that. Rich says, have you ever tried to make a correlation table for the ticks and the ES? No, and I don't think it would work out the way you think it would work out. So what you have to understand about the ticks is, they're measuring the stocks that are going up a tick versus the stocks going down a tick, and it's in the entire indice. So if you look at the ticks at the end of the day, like look at yesterday's ticks. These are yesterday's ticks. Okay. What do you observe? First off, they went, most of the time they were right around the middle of the range. They were right around 0. They made extremes on both sides, right? They got way oversold and overbought. They spent most of the time above the 0 line. Much more of the closes were above the 0 line. So that kind of corresponds with what happened yesterday. We had some extreme moves to the downside, but they reversed. We spent most of the day with upward momentum that got us up here into the close. So seeing that the tick spent more of the time above the zero line makes sense in the second half of the day. But obviously this chart, doesn't look like the chart of the ES at all. So the way I like to use the ticks is I literally just say, if at this moment right now, I feel uncertain, I don't know what the market is going to do, what do the ticks do from this moment? So we talked about, we were just dancing at the overnight price and we were looking to see, are we going to head lower or are we going to head back up for the high? Well, we were at 40, the ticks pushed their way up to 170. So now we're at the high. Okay. So that's just good for that move. Just like that. Now it's over. Now they don't matter anymore, right? Because it was just looking to see, can we get to the high or not? So the ticks are only kind of an indication for particular moments where you're looking for particular pieces of information. Then once you get up to that high, now it's a totally different set of information we're looking for, which is how much time and how much volume can we bring in up here. So yeah, you just use the ticks from moment to moment, not as like all day, every day, they're going to give you great signals. So we just got to look above and fail of yesterday's high. Again, very bot driven. Did not really give the humans a chance to do business up there. They just poked up to take out some stops. Yeah, poked up just enough to get this liquidity to disappear. But they moved it higher, which means they're trying to pull price higher. Okay. So we should get a chance to see if they can turn this into support. So you say to me, Charles, what are you talking about? Well, this liquidity that was sitting right here at 63.10, they didn't really want to fill orders there. They were trying to use it as a magnet to pull price to it. So when price got there, they were like, oh no, well, we don't want to let these orders fill. So they got rid of it. But what did they immediately do 2 seconds later? Or I should say within a fraction of a second later, they moved it up higher. So they're trying to keep pulling the market up for now. If it had just completely disappeared, then we would expect the market to crash lower. But them moving it up means that they're not done with the upside move yet. They're trying to get that one more poke to really convince people to go long here. I got just one more poke and the stops got taken and the market reversed back through the opening price. Okay, that didn't work. Rich says, I was thinking about watching it as a correlation at the time you mentioned it. If you wanted to track that, go for it. To me, it's too much to think about at once. I got to just let my brain process what I'm seeing, not also, typing in the data and the information. So they just did it again. Did you guys see that? They did it a little faster this time because you could see this last time, that volume dot is probably some of those orders filling before they were able to move it. This time they moved it a little early. They were like, no, fuck that. We don't want to let any orders fill here. So they are trying to pull price up. As of now, it is bullish if when they come back down, and they will come back down, if when they come back down towards yesterday's high, 63.09, if they can turn that into support, it will be very bullish. Like for the day, it will mean the market wants to go higher. If they cannot find support there, it means we're coming back down to 6,300. So from this point, support at 63.09 is buyable for a move higher, the first target being the overnight high, unless we test it first, which it looks like we may poke up there first and fail. And then if we don't get support at 63.09, the move is short to get to 6,300. Let's see what happens. They let some of it fill there too. Interesting. So if I had to make a guess of what this is right here, I would say this is a real trader doing this, not a computer. And what I suspect it is, it's one of two things. It's either somebody who was short, and these are stops, or it's somebody that was long, and these are their taking profits. Tough to know which. But the exactness of those pops, that was manual. Okay, so we just created what we call a weak high because the market got to the overnight high, but it didn't pass through the overnight high. So that means anyone that's going short right now has their stop above the overnight high, increasing the odds we're going to come back for it. So that also increases the odds that if we come back to yesterday's high, it will act as support so that we can come back and repair that weak high. Again, unless we repair it first. Okay, the high is still weak. Need one more letter up there. DNK says, good morning. My call from yesterday worked more or less how I said, but the news move took me out. So if I'm remembering correctly, it was that they will test the balance area low and then reverse back up to the balance area high. Was that the call? And that is exactly what it did. But if only you could have told us that it was going to do it in a massive liquidation. Sniper says he has a buy order sitting on the overnight low. If it hits, great. If not, no trade. I'm okay with that. That is a really good risk, to reward potential trade. So let's say hypothetically, the market were to poke up, come back down, not find support, come all the way down to the overnight low. That is a good place to get long in there, because if the market hasn't tested the balance area high yet, it's going to. So it'll probably find support in here around yesterday's fairest price, say 84.85, and then turn around and head up to the balance area high. So if you were getting in at the overnight low to a long, that would be a great entry for a trade. But there is a chance that the market could go to new all-time highs today and never come back down to that overnight low. So not that I'm telling you to do this today, but I'm saying if you were then at the end of the day going back and looking at your trades and realizing I didn't take any trades today, could there have been a trade to take? Support at the previous day's high would be a trade for that momentum, or support at the overnight high would be a trade for that momentum. Not as good of an entry as the overnight low in terms of risk to reward, but still, a high probability opportunity. Just food for thought. Okay, so the fact that we got above the overnight high makes me bullish. I still would not go long up here. But if they can now turn this, what was just resistance around 63.16, if they can now turn this into support, I would look for continuation higher. Or if they come back down to yesterday's high at 63.09 and turn that into support, I'd be looking for continuation higher. So I am bullish as long as we stay above 63.08, and I am expecting a dip. I do not think you need to buy the high. A lot of times people that are new to my channel, they misconstrue me putting up a green banner as meaning you go long right this minute, go long. No. The green banner means I can go long. I then need a dip into a potential support level to actually enter a trade. So I'm not saying buy the high. I'm saying buy the dip. But Charles, what if it immediately pops higher first? You still wait for the dip. Maybe you'll have to get in at a higher price, but it's after a dip, always. Never chase price. It might work today, it might work tomorrow, but it will not work over the next month, over the next 6 months, over the next year. What will work is buying the dip, waiting for it to come back down and buying the support. Sheena in the house. Welcome, welcome. If you have not yet, please smash that thumbs up. We got 92 people hanging out, only 33 likes. We can do better than that. We got 34 likes. Okay, so as we work our way to the balance area high, this was our target to the upside based on balance rules. Okay, So this is a spot where the market can run out of steam. And the question we want to ask ourselves is, from the market open this morning, which was down here, how did the market get to the balance area high? And the answer is all FOMO and short covering. The first few little pops up was short covering. Then you had FOMO chasing the price, which is what we got right here at the overnight high. So in order for this market to keep going higher from here, we have to keep seeing the same behavior happen. They have to push up. They have to stay up here and not come down. Push up, stay up here and not come down. Push up, stay up here and not come down. If they start to dip, it could be a vicious one. So again, wait for the dip, wait to see support, then enter the trade. And if the market comes back down through 63.08, it could go way down. So you don't want to be long if we come back through 63.08. You want to see support above there in order to assume this thing can keep going. It is bullish to get short covering and FOMO buying. It is new business, and that is always bullish. But they haven't given the strong hands a chance to enter yet. And we don't know if they will once given that chance. Because so far, it's all just traders chasing price. And that's great as long as it lasts. But it's not great once it runs out. It's also worth noting we have a low volume node right above the overnight high right here at 63.18. We consider it low volume because it has less than 200 contracts that traded there. So that tells us even if the FOMO continues and the price keeps climbing like this, there's an extremely high probability it's going to come back to test this overnight high. So we don't need to chase it to the upside. We can wait for that dip. And there it is. They just backfilled that low volume node. So now we're watching this overnight high, this area around 63.17, to see if we get buyers here. This is the first dip. This is the first chance for real buyers to choose to continue this momentum. What are we going to look at? The ticks. So right now they're at negative 103. Where do they go from here? Do they pop back up? That is a sign of buyers stepping in and increasing the odds the market is going to continue. Or do they go lower, which tells us we need to dip back down towards yesterday's high? Can they hold 63.16 as support? The ticks will tell the tale. Okay, a lot of tug of war happening here. I think they need another poke into 63.16 to see if they can really hold it. R&R says, how do you calculate a balance area high? That is a great question. Let me just watch what happens here at the overnight high for a second, and then I will dive into that. This is just like a really pivotal moment for the rest of the day. If they can hold the support, the market can keep going higher for hours. So I just want to see whether they can hold this or not, or if we need to head back to yesterday's high. If you ever hear me go quiet, it's because I'm staring at the chart and I'm trying to figure out what's happening. Okay, so we are getting support that is bullish for continuation higher. That being said, I don't love it. It still feels a bit FOMO-y. It doesn't feel like strong buying coming in here. So I suspect we're going to get another push to the upside, but then they're going to come back down to the overnight high again. I don't think they're done with this overnight high yet. But for now, it's bullish. The next resistance above is this node right here, which is around 63.30. You can see on the cumulative volume, there's a little thing that pops out right here, a little thing that pops out right here. Those are potential resistance levels. All right, let's talk about balance. If you're new to the channel, this is something that you might find interesting. So to understand what the market is going to do intraday, like what is it going to do throughout the day today, the best thing that we can do is have an understanding of what the market is doing over the days. What was it doing 2 days ago? What was it doing 3 days ago? How does that all match up with what's happening here today? When you can understand the longer time frame, it can give you an edge on the shorter time frame. Right now, we happen to be in a balance area that's like great for teaching purposes because it is so exact. They generally are not this beautiful and this perfect, but this one happens to be one of those, so it's good for teaching purposes. So, okay, let's start with the concept that we call balance and momentum. The market is always doing one of the two things. Momentum is when it is moving in a certain direction consistently. So you can see in here we had balance. In here we had the market wasn't moving in one direction. It was going up and down and up and down. That was balance. But then it broke out of that balance. It was able to break out of that balance, to get away from that zone on this particular day, right? So that began the momentum. From that point on, as long as the market continued to make higher lows, it was likely to keep going up. And you could see it did that day after day after day after day. It kept making higher lows and it kept going up. That's what we call one time framing higher. So in this case, one time framing higher on a daily basis. And as long as it keeps one time framing higher, we assume that momentum is going to keep going. If today's low is above yesterday's low, tomorrow we'll probably make a new high. If today's low is above yesterday's low, tomorrow we'll probably make a new high. And we just assume that that momentum is going to keep going until we make a new low, right? That's our sign that the momentum is likely over and we need to enter balance. Now, there are two ways the market can balance off momentum. The first way is that it can go sideways with price. That is what we call balancing with time. The other way is it can just reverse with price, coming back down to test a previous, resistance level to see if it will become support. That is what we call balancing with price. So at that moment, on that day, you don't know which is going to happen. You just made a lower low, so you know the momentum is likely over. You know you're done going up for now, but you don't yet know, is it going to pull back with price or is it going to go sideways? And so then we start looking for signals of which of those two is going to happen. Once you get a signal that you're balancing with time, okay, you're trying to draw a balance area. You're trying to say, okay, where is it balancing? What is the range? The high is going to be wherever the market ran out of steam on the last day that it had momentum. And then the low is going to be whatever area the market is finding support and reversing. In particular, where it slingshots back up to that area where the market ran out of steam when it had momentum. So we may not have known on this particular day, on the 7th, that this area was going to be the balance area low. But when we turned around and started heading back up towards the high, we knew it was somewhere down here around these 2 days lows, right? And we know that the area where it's going to run out of steam is somewhere up here around this high. So balance areas are never exact things. It's not like we always have an exact level that we go, well, it's this level, blah, blah. No. It's intuitive. You have to think your way through it. And so I don't think I actually drew this balance area until we failed on this day. I think I wasn't even certain of it until we looked above and failed here. Then I knew for sure what the high was. And obviously I knew for sure what the low was at that point. So from that point on, we could target moves to that balance area low. We knew we're coming down to that balance area low. And that day came to it to a tick. I had this marked on the chart, 2 days beforehand, that this would be where the market would go because it couldn't keep going up here. We couldn't break out of balance. And if you can't break out of balance, you're heading to the balance area low. And then this happened in the overnight. And the very next day I said, because we tested the balance area low, we might be heading back up to the balance area high. Well, look what we did. But we didn't just get to that balance area high the next day. We failed. We came back in. And so I said the next target is probably the balance area low. And we did it again yesterday. Got to the balance area low, reversed, and turned around, which is why I said this morning the likely target to the upside is the balance area high, which we just tagged. That is again why I say, as we got up here, we really have to be cautious, trusting support. Because if we get above the balance area high and then we fail and we come back down, guess what the market's doing next? It's heading all the way back down to that balance area low, just like it did here and here and here. So if that happens again today, we don't want to be FOMOing into longs up here because the market could completely reverse on us. And this one has been vicious. It's been really harsh reversals at both ends. I mean, just shockingly fast moves once it reverses. So do we want to be long as intraday traders to get to this balance area high? Yes, right? Once you see that the market has the support, you can go long to get there. But beyond there, you want to be cautious with those longs. Now, if we get there and we get more buying and more buying and more buying, then we can start to have a conversation about a breakout from balance. But that's a whole nother set of cookies. And that's not in play for today. Today, we just want to see if we can break out. We don't know that means it's going to keep going. It could mean we're going to repeat this and this and turn around and come back down. So as far as drawing those balance areas, let's zoom back and look at the chart and try to figure out why I chose the levels that I did. Well, if we look, this was the first day where we still had that momentum up. And when we look at the chart, where does that momentum fade off? Right there, right? That's where the momentum tapers off. Less and less time above that level, less and less volume above that level. So, okay, that's very interesting to me, right? Market comes down here, it reverses, comes back up. Where do things taper off? Look at this day. Where does the time and volume taper off? Right here and right here. What about in this overnight? Right here and right here. This day, we found support above there. In the overnight, look at where it tapers off, right there. So that's your balance area low. So now you know your balance area high is up here, your balance area low is right here. So as the market starts to work its way higher, where do you think it's going? You think it's going here. All right, well, let's observe on that day what happens at that level. Let's zoom in and let's take a look. The market had a ton of momentum, left behind single prints even. But then what happens right at this area? That's where the two-sided trade starts. That's where we see some tapering off on time and some tapering off on volume. So when you open the next day and you're down here, what's the most obvious thing? We're still in balance. We got up to that balance area high and we started running out of time up there. We started running out of volume up there. So where are we going next? To the downside. And we just keep looking at those levels every time we get there, which is what we're doing right here, right now. We're watching what happens at this balance area high. Do we just taper off above here? Less and less time, less and less volume, and then pull back down? Or can we stay up here, spend time, bring in volume, keep that momentum going? Well, then intraday today, we're bullish to head up to the all-time high because that's weak. Whenever you create an all-time high in the overnight market, it's always weak. So that's a magnet pulling on price. So if we see new buying up here, we assume we're heading all the way up to the all-time high intraday today. And then what do we say at the end of the day? We look at the profile and we see, did we spend most of our time today and bring in most of our volume up here? Or what if we poke up to that all-time high and then pull back down in the afternoon and spend a bunch of time and bring in a bunch of volume down here? Well, then we probably got another look above and fail. So then we will be able to carry that information forward into tomorrow. Let's just say, hypothetically, as a scenario, the market works its way higher, it pokes above the all-time high, it comes back down, and then it stays up here for the rest of the day. Well, that significantly increases the odds we're going to make new all-time highs the next day. And as long as the day after that, as long as we make a higher low tomorrow, the day after that, it'll likely keep going again and again and again, because that will be breaking out of balance. That would be a repeat of what happened here. If today we can stay up here and bring in volume, and tomorrow we can keep that momentum going, it's a break out of balance, which creates momentum. And so that's all we do. When you hear me say, we trade the auction process, that's the process. It is a question of what is the market doing right now on a daily time frame? Is it in momentum or is it in balance? And then what are the intraday behaviors we would first off expect to see based on which of those two we're in? And then by the end of the day, what was the results? That gives us insights for what to expect the next day. Okay, so earlier I said it looked like the market had some momentum and it was going to head back up for that A period high, but that I felt we needed another test of the overnight high. So I would now say I am only bullish moving forward for the rest of the day today if we stay above 63.15. If the market comes back down now and it can't find buyers at this overnight high, we're going to squeeze all the people going long right now. There are traders going long right now. That is bullish. That is a sign of momentum to the upside. But where will those traders change their mind and get taken out of their longs if we start to dip below this overnight high? So I am bullish as long as we stay above 63.15. If we come back through 63.15, I expect we're going to pull back into yesterday's range. Can the buyers hold that overnight high? If so, the momentum to the upside will continue. Sook in the house. Good morning to you. Nap is here. Got 99 people hanging out. Only 44 likes. I swear to God, if we can get it above 50 likes, I bet we can get more than 100 people in the room. Can we do it? Can we get some likes? Thank you, Croco. Appreciate you. Will, if you could log in on both your accounts and like, that would be great. Okay, so we are right now bringing in new buyers above the overnight high, and that is bullish to see. But we know if they can't hold it, they'll squeeze all these buyers, and that'll be bearish because it'll cause the market to dip back down through the opening price. So I'd love to know you guys' thoughts. There's a survey in the chat. Do you think from here, from right now, we're going to continue higher? We're going to hold the support and keep going up today? Or do you think that support is going to break and we're going to head back down into yesterday's range? Let me know your thoughts in the survey. S. Barker says, I've been emotionally damaged by so many pullbacks. I assume you're talking about on a slightly longer time frame, more so than intraday. Yes, it happens. You know, I tend to find for myself, it's like the more confident I am that I'm right, the more it sort of messes me up psychologically when I'm wrong. The important thing you have to remind yourself is the market is random. Anyone that tells you otherwise is lying to you. Everything is random. So anytime you think you understand what the market is doing, even if every signal in the world is telling you you're right, you could still be wrong and you could still be stopped out. And so when it happens, you have to remind yourself of that. You have to say, self, this is no big deal. Sometimes you get stopped out. If the opportunity presents itself again, you still get in that trade the next time. Because what happens to people is, you know, they buy support. Boom, they buy some support. The market bounces. They feel like a genius. The next day, they try to do the same thing. They go to buy support. This time it fails. It crashes lower. And now they're not feeling like a genius so much. The next day, the market comes back down. They buy support. It breaks again. And then they start to say, fuck buying support. I'm not going to do that. But that's not the way you trade. You keep buying support every time. Over a series of trades, it will work out more than it won't. It will hold more than it will break. But you have to accept that it's going to be emotionally suck on those days where it doesn't hold and it breaks, and not let that affect you psychologically. All right, here's the moment of truth for the buyers. We are back at that overnight high. If they can hold it, this thing is going to new all-time highs. If they can't, we're heading right back down through the opening price. And the survey says, you guys are as confused as the market. 53% say the pullback, 46% say moving higher. So that's why we're going to chop and grind on the overnight high, because half of you think it's going up and half of you think it's going down. And the market is going to keep grinding here until you've all entered your trade. And then it'll make whatever move it's going to make. Okay, so now we're watching these ticks. This is where, if there are strong hands, the type of traders that'll stay in this trade all day, the type of traders that'll stay in this until the all-time high, if they're going to step in, it's now. So let's watch those ticks and see if buyers step in. If not, this was just another test of the balance area high, and the balance will continue. Dun dun. Ticks are saying no support. There it goes. All right. So I am no longer bullish. I now think we need to head back down into yesterday's range to look for those discount shoppers. I would not describe myself as bearish right now because the market could easily find support in here and then turn around and head back up. We did just create a poor high. A poor high is a magnet for price. So it's very common the market will push away from that poor high, then come back later on in the day and repair it. So I would not describe myself as bearish, like we need some massive big pullback. But I would say this is not a moment to be long. I'd wait until we get good, strong hand support and confirmation from the ticks. So the next level to watch is yesterday's high. At 63.09. Another thing to watch for is this note of liquidity in Bookmap at 63.25. Since they put that there, it's been scaring price away. So if this suddenly disappears, price can bounce and come back up. But as long as it's there, price will probably need to dip. ER says, I thought those liquidity targets on Bookmap act as magnets. Yeah, they're magnets both ways, though. They can be positive magnets that pull the market to them, or they can be negative magnets that push the market away from them. And you can only know by observing what happens at the moment that the magnet is created or that the level is created. So for example, if you look at this one, the market's trying to go higher, right? They start to add liquidity. What happens? It pushes away. Okay. The market tries to go higher. What happens? They add liquidity. It pushes away. It's very subtle, but this actually gets a little darker right here. So they came back up again. They added liquidity. It pushes away. So in this case, this is a negative magnet that is pushing price away, not a positive. So in that case, as soon as that disappears, guess what the market can do? Turn around and come back up. So now we just tagged yesterday's high, our potential support level, and look what's happening to that liquidity. It's starting to fade. The color is getting less and less intense. So they are looking for the market to find support in here and then turn around and bring it right back up. So obviously we can't make that call for sure until it completely disappears, but this is what they're using it for right now. They're using liquidity above to scare price back down. And then you say, well, how does that make sense logically? Well, it's computers trading, okay, not people. So if you think about it like this, the idea is if a computer believes it should go long right here, it has some sort of target to the upside. Let's say it thinks you're going to get to 33.30 is what it thinks the market's going to do. If all of a sudden you start piling on liquidity above it, that computer goes beep boop, we won't make it to 63.30. We do not want to be in this long anymore. Beep boop, and then they start to exit those longs. So the liquidity can act both as a magnet that pulls price to it and one that scares it away based on the algorithms that are trading the market. But the cool thing is, as soon as those levels disappear, those old bots start to say, beep boop, we can go long again. And then the market turns around and starts going up. And guys, don't question my computer speak. That's how they talk, okay? It's just, don't get mad at me. They use beep boops. Hello, B-Boop, my old friend. Okay, so where are we at intraday today? Well, we're not bearish, right? We're not bearish at all. We know that this move from the overnight high to the previous day's high was just squeezing longs from up here, just taking out some stops. So now our question is, can we turn this area around yesterday's high into support? Now, I wouldn't say yesterday's high to a tick, but I would say any support above the opening price can get the market bullish once again. We have the magnet at the high, which is the poor high. So there's a reason for the market to turn around and head back up through 63.23. If we get support, that's the sign it's ready to head back up. And of course, if we pass through the opening price, then we're heading much lower. Okay. So neutral for now, and I will let you know if I change my mind. And that would be support and ticks above zero. I got to see them above zero now to trust it. Because fool me once, shame on you. Fool me twice, well, we just don't get fooled again. We got to 56 likes. Now we just are waiting for those 2 extra viewers to show up so we can break 100. Those 2 viewers are out there somewhere. The YouTube algorithm is whispering to them, become a pirate. It's way more fun. RR says, is your Bookmap version free or a paid version? It's a paid version. I have the full Bookmap Global Plus so that I can get the MBO package. so that I can see the stops and icebergs. So we haven't really talked about it much today, but these little levels that you see right here, where you see the two triangles, those are iceberg orders. And these little ones where you see the circles, those are stops getting taken out. And that is another tool I use intraday to help me understand what the market is doing. We haven't really needed it so far today because we've been focused on momentum, and you don't really need stops and icebergs for momentum. You just need support to hold or not hold. But if it comes into play later on, we'll be talking about that as well. ER says, do you ever put a position on the NQ, Charles? No. I long ago learned the NQ is not right for me. It moves too far, too fast, causes too many emotions. So I stay focused on the ES, and I either, take trades on the ES or the MES, or I buy options on the MES is generally what I do. ER says, lastly, I must ask if you have a similar opinion about gold. It's a little more, or it's similarly volatile, but a little more tame. I would say gold is way more tame. See, so gold is too boring. It's like some of the porridge is too hot and some of the porridge is too cold. I like it just right. NQ is too much volatility. Gold is not enough volatility. Yeah, gold is not as interesting to me because it doesn't have the same patterns that the ES has. What you have to understand about the ES is it's not one single entity. Like take an individual stock like Tesla or whatever, right? Anything can happen on any given day, right? Anything. One little piece of news and that whole thing can flip and reverse and change and da-da-da-da. I mean, it can be very random. But the S&P 500 is 500 different companies combined together. And it's not even just those companies. It's all the options traded on those companies. It's all the options that are traded on the SPY and the VOO and the SPX and the futures. And all these different mechanisms are all affecting how price moves for the ES. So it just tends to have rhythms that are a little bit more predictable because there's so much arbitrage happening between all these different entities, right? Whereas gold is just gold, right? It's just people are buying it or they're not. So it doesn't have the same patterns that for intraday trading that the ES does. Now, if you're a swing trader, gold is fantastic and there's nothing wrong with that. But you just often have to wait very long periods of time for things to play out because gold will stay range bound for, here's your range right here. Stay range bound for 4 months. And you're like, geez Louise, would you break? Would you go somewhere? Would you fucking crash or take off to the moon, please? But no, it's like you got to wait and wait and wait. So I'm not saying there aren't moments where it's very exciting. There aren't little periods of time where gold is all the rage because Generally, something's happening with global politics that's causing a big change, but that might only last for a couple of weeks. You know what I mean? And then you get 3 months of nothing, 3 months of chop. And so as a day trader, that's very annoying because it's like it's super exciting for those couple of weeks and then it's months and months of torture. Whereas with the ES, you tend to get opportunities every day, no matter what's going on. And that's why I like it. The next question is, even though you promised the other one was your last question, no, I'm just kidding. Ask as many questions as you want. He says, as a market profile specialist, would you consider Stoudemire or Dalton's books? Would you prefer? Dalton's books are a little more updated than Stoudemire's. Stoudemire's approach to market profile was before computers started trading the market. Everything changed when computers started trading the market. So if you're talking 1996 or whatever, Stoudemire was the best source. 1996 to, 2020, Dalton was the best source. Nowadays, and I love Jim Dalton, don't get me wrong, I have nothing but respect for the man. Nowadays, I feel like even Jim Dalton is a little bit behind the curve because Jim Dalton doesn't understand the high frequency bots. He doesn't understand the effects of the options market on the underlying assets. He still talks about weak references as if they're all short-term traders. Like every move that ever happens in the market every day is just you and me with our tiny little accounts affecting the market. He's not understanding that there's billions of dollars flowing through the options market. Most of the liquidity is through the options market, and that is actually what's affecting the underlying price moves. So I think both are great. I recommend you read all their books. There's no such thing as, a waste of time. Even if you pick up one single idea from a book that you might be able to use in your trading, it has paid for itself, right? If a book costs $50 to buy and $50 is one single point on the ES, you can pay for that book with one trade that works. So I'm all for education, but this is why I do what I do, because I don't think there's many people right now in the world of market profile that are keeping up with the constant changes in the market, which is what my mission is, to keep up with how the infrastructure changes and how we can use market profile to read those changes and adapt to them in real time. Mo says, do you have a reading list you would recommend? I do. If you head to the website, piratetraders.io, you'll see it under the Learn tab. So if you go to Learn, you'll see book recommendations right there. So these are all the books I recommend. They're organized into different categories. Ones that are about psychology, self-understanding. Ones that are about market understanding, reading charts and understanding how to read the market. And then just other books that are, good educational resources that really help traders. Got them categorized. I also just updated the market profile glossary. So if anybody's looking to learn market profile terminology so you can understand what I'm talking about, I've put that all in here to try to make it a little bit easier for people that are new to grasp the concepts. And again, these terms, these definitions have been updated. They're not the same as in Jim Dalton's books and stuff like that because the reality of the way things played out have changed over the last few years. All right. Well, with that, I think it's probably a good time to bring this live stream to a close. We never made it to 100 viewers. So I'm going to go cry. That was my goal for the day, and I have utterly failed. But if you enjoyed the live stream, if you found it educational, if you found it fun in any way, shape, or form, I highly recommend you check out the Pirate Traders Brigade. There's a link in the description. We were just on the website, but that will take you to the Pirate Traders /join page. You just click this sign me up button and then you can sign up. You get live streams from me every day for the first hour. You get a newsletter every morning with my opinion of what might happen that day in the market and some targets if you're trading the ES. You get access to the Discord where traders can share information with each other. Whenever we do meetups, whether they are webinars like digital meetups or real life meetups, whenever I have merch, which I haven't had for a while, but if I have merch, there's discounts for brigade members. And then any research that we collect that we share with each other, you get access to that. So it's $20 a month. You can cancel anytime. And it is a wonderful community, very supportive, very polite, kind of the opposite of what you would expect from a pirate, but that's what we got. We got an awesome group of people and we'd love to have you join. As far as what I expect for the market the rest of the day, I would keep it this simple right now. I would say I am bullish in the fact that I think the market is going to come back up through the current high, but I am not bullish enough to enter a trade right at this moment. I think the market needs to come back into yesterday's range. So it needs to come back below 63.09 and it needs to spend some time in here. If when it does, we bring in buyers, so you see the ticks reverse and get back above the zero line, that would be bullish. Any support above the opening price right now, any support above 63.04 is bullish, okay? That it will eventually go higher. But we don't have that sort of exciting momentum that we would want to have to be able to just go long and wait it out to get there. I think we need to spend some more time grinding. I think we need to spend some more time trying to bring in buyers. We will see those buyers when those ticks get above the zero line. That's when we can trust the support. As far as to carry forward into the days ahead, if the market cannot find support above that opening price, look for it to come back down towards the overnight low. Okay? If it gets new selling below there, that is very bearish carrying forward because this does count as a test of the balance area high. So if we fail the opening price today, that's bearish to see. If we fail the overnight low, that's very bearish that we're heading back to the balance area low. But in my opinion, they want to head up and test those all-time highs. If not by the end of the day today or the overnight tonight, probably tomorrow. That's what I got with the information I have. I wish you guys the very best. If you're a member of the brigade, we'll see you tomorrow morning. Thanks a lot, everyone.